This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
New vision. House Republicans unveil their blueprint to repeal and replace key parts of the Affordable Care Act, potentially changing health care as we know it.
Target trimmed. China expects slower economic growth, and there's one thing that's creating uncertainty for the world's second largest economy.
Those stories and much more tonight on Nightly Business Report for Monday, March 6th.
Good evening, everyone, and welcome. Well, Washington promises to play a very prominent role on Wall Street over the next few days. Not that it hasn't been already this year. President Trump started this week by signing a new immigration order, an issue important to businesses. The week will end with a key report on job creation when the Labor Department releases the employment report for February. But we begin tonight with late-breaking news on health care. Late today, investors got their first look at the Republican plan to repeal and replace the Affordable Care Act. Kayla Tausche reports tonight from Washington. Kayla, this is not even yet a bill, really. It is more a blueprint. What's in it?
Well, Tyler, it will get marked up this week, so it is the language that two important committees in Congress will use as their starting point for discussions over exactly what this new health care law that the Republicans are putting forward will look like. And as many of the tenets that previous leaked drafts had, they were leaked to start discussion and conversation about what House Republicans could actually support. They interestingly transitioned to a tax credit for customers who would qualify under this plan between $2,000 and $14,000. Interestingly, it will depend on the customer's age and the customer's income. Also, states will get about $100 billion in an innovation fund is what the House is calling it, but it is expected to go toward covering patients that have pre-existing conditions. Customers will be able to nearly double the amount that they contribute to health spending accounts to go toward their health care. And then one of the more controversial points is exactly what the transition out of a Medicaid expansion would look like. The expansion would be frozen in 2020, and some changes to the Medicaid program would kick in at that point. Expect state governors to weigh in very vocally about what that looks like.
Kayla, you walked us through a little bit of what happens next, but what are some of the steps that investors can expect this week?
Well, later this week, Sue, you will see the House Ways and Means Committee as well as the Energy and Commerce Committees do what they call a markup of the bill. That's where people weigh in, they make edits, they have a vociferous debate about exactly what's in it, and then what emerges from those two committees will go to the Budget Committee, and you will see potentially the Congressional Budget Office release a scoring of the bill or exactly what it would do to the financial situation in this country. That is something that conservatives are watching very closely for. House Republicans say that their hope is to have a bill on the president's desk by Easter.
So tell us about the president. Has he weighed in on this in any way? I assume that much of what is in this draft bill has been run by the White House.
Well, he very much deputized House Republicans to put this legislation together. It is at the top of the administration's agenda, but they largely put the responsibility in the hands of Congress. Last week, House Speaker Paul Ryan said that the White House, the Senate, and the House are all in sync on this, but there has been some opposition from the Senate. We'll see exactly once they get their hands on this language, what parts of it they want to pick apart and whether Senate support for this is actually there. If not, you could see the president hit the trail to drum up support, guys.
All right, Kayla, thanks very much. Kayla Tausche, late breaking news from Washington.
President Trump today signed a new executive order on immigration. The action temporarily suspends immigration into the U.S. from 6 predominantly Muslim countries. Citizens from Iran, Somalia, Sudan, Yemen, Syria, and Libya will be subject to a 90-day ban on travel into this country. Iraq was part of the first order, but removed from this one.
Iraq is an important ally in the fight to defeat ISIS, with their brave soldiers fighting in close coordination with America's men and women in uniform. This intense review over the past month identified multiple security measures that the State Department and the government of Iraq will be implementing to achieve our shared objective of preventing those with criminal or terroristic intent from reaching the United States.
Separately, the Department of Homeland Security will temporarily suspend the fast-tracking of applicants for H-1B visas, which are primarily used by the tech industry to hire high-skilled workers. That means that applicants can no longer pay extra to have their paperwork expedited.
Well, let's turn now to Andrew Friedman to talk more about that new immigration order and the possible changes coming to the Affordable Care Act and how he sees it all playing out in the financial markets. Oh, incidentally, he's the principal at the Washington Update. Andy, welcome. Good to have you with us.
Thanks, Tyler.
All right, let's talk first about health care. There's a lot more we don't know. We really just got this massive blueprint within the last half hour. I believe it has no coverage mandates and no penalties for people who don't have it. It's going to be a heavy lift in Congress, even on the House side, especially on the Senate side. Can they do it?
I think it's going to be hard. I mean, they can pull the financial underpinnings from out from under the Affordable Care Act, as you know, with 51 votes in the Senate, because there's a procedure that lets tax and fiscal legislation pass with 51 votes. But to replace the whole law requires 60 votes in the Senate, and more importantly, to actually replace it with something requires an affirmative vote. So I think it's going to be hard to get something through exactly as it is. I think the most concern for the markets here, though, is something we don't know, which is how much is it going to cost?
Right. That's what I was just going to say. How do you think Wall Street will view it? Obviously, they're going to parse through the language such as we have it tonight and probably react to it tomorrow. What do you think?
I think for now it's going to be a wait-and-see approach. I think it comes down to, is this really going to balloon the deficit, which is what I think businesses are most concerned about. There's also a tangential concern, so it's a little bit ironic, but I think businesses want to get this out of the way so that Congress can focus on the most important thing, which is tax reform and government stimulus. So I think if the process is able to move smoothly and the Congress can pivot, that will be well received. But in the short run, I think businesses will wait to see what the cost is and what kind of reaction they get from others in Congress.
Where, from what you know, and forgive me because I know this is really just news out in the last half hour or so, where would the cost ballooning come from in this proposal?
Well, it would probably come from the devil in the details of the tax credits. As you heard, the idea is to replace a public system with subsidies with a private system where people get their own credits and go out and buy their own insurance. How large are those credits? How many people will accept them? How many people will still be able to get Medicaid? You're going to get rid of the major funding mechanism of Obamacare, which is the 3.8% surtax on investment income. That's going to get repealed. So you're not going to have as much revenue coming in. How much of this money is going to be going out in tax credits?
Andy, thanks for being with us again. Andrew Friedman with the Washington Update.
Thanks for inviting me.
You bet.
On Wall Street, stocks closed lower. Financial and material stocks weighed on the broader market as investors analyze the likelihood of a possible interest rate increase at the central bank's meeting next week. The Dow Jones Industrial Average fell 51 points to 20,954. The Nasdaq was off 21 and the S&P 500 dropped 7.
New orders for U.S.-made goods increased for a second straight month in January. According to the Commerce Department, factory orders rose 1.2%, which was more than expected. The report is more evidence that the manufacturing sector is regaining its footing after being hit by weak overseas growth, low oil prices, and the strong dollar.
President Trump wants to reinvigorate the nation's manufacturing base by renegotiating some trade deals. Today, one of his policy advisors issued a stark warning on trade deficits. Steve Leisman is in Washington.
Imagine a future where foreigners own significant parts of the nation's food supply, where they can swoop in and buy cutting-edge technologies in Silicon Valley. That's the danger from large U.S. trade deficits, as foretold by Peter Navarro, President Trump's top trade economist.
If the current distorted market patterns continue, and to paraphrase Keynes, in the long run, we are all likely to be owned by foreigners.
Navarro was speaking to the National Association for Business Economics, a group whose members are highly skeptical of Trump's trade policies.
So economists are not expressing a lot of concerns about immigration policies or trade policies, as we're hearing from the administration.
When the U.S. buys more goods and services from foreigners than they buy from us, foreigners accumulate dollars. They can then use those dollars to buy hard assets in the U.S. Now, foreigners currently own about 20% of U.S. assets, though most of it's in the form of treasuries and stocks, not controlling interests in companies.
The kind of assets that these foreigners have been buying have been things like U.S. Treasury bills, which have in effect lowered our cost of funding.
Navarro said the Trump administration's plans are not to fix these problems primarily with tariffs, though he wouldn't rule them out. He said the president seeks fair, free, and reciprocal trade agreements that will mean negotiating tougher deals with countries that have large surpluses with the U.S. He says this could help bring back manufacturing jobs.
One of the major goals of the Trump administration is to reclaim all of the supply chain and manufacturing capabilities that would otherwise exist if the playing field were level.
Many economists are skeptical, believing that automation is more responsible for job losses than trade. And they argue that trade has helped boost U.S. growth and productivity and lifted many around the world out of poverty. That's a stark difference from the darker view of trade from the Trump administration. For Nightly Business Report, I'm Steve Leisman in Washington.
Oil prices fell modestly today following a downbeat economic forecast from China. More on that in just a moment. Now, that downbeat outlook raised concerns about demand for the commodity, especially as production here in the U.S. ramps up. And as Jackie DeAngelis reports, that was the topic of conversation at CERAWeek, a major oil conference in Houston.
It's the Super Bowl of the energy industry, CERAWeek, attended by the movers and shakers in the global oil and gas industry. Not just big oil, but also shale players and representatives of the world's major oil-producing nations and OPEC. The central theme is how to operate at this delicate time when recent oil price hikes seem to be sticking. CEOs are approaching this environment with caution, though they are enthusiastic about what's to come. Still, Chesapeake CEO Doug Lawler says it's important to remain nimble.
What's very, very important is that I think particularly for the U.S. producers, a company like Chesapeake, that the strength of the company, the cost improvements, we're very well positioned in this $50 to $55 a barrel window to continue to invest and provide the energy that our country and the world needs.
Trump administration policies can also change the game. A pro-energy and infrastructure-driven policy stance is expected to help the industry thrive as the U.S. moves towards its goal of energy independence. Policies aside, it's the technology making companies more efficient and competitive, in some cases getting twice as much out of each well than had been possible before.
The continued improvements in technology have been remarkable in the past several years. We've continued to make great progress on drilling, completion, cycle times, opportunities to reduce our cash costs as well as our capital efficiency to make the U.S. more competitive.
While generally confident about an uptrend in prices, most players are still cautious. Policy changes and other surprises could disrupt the delicate balance of supply and demand. For Nightly Business Report, I'm Jackie DeAngelis in Houston.
Late today, ExxonMobil said it will invest $20 billion through 2022 to expand its chemical and oil refining plants on the Gulf Coast. The world's largest publicly traded oil producer said the investments should create 35,000 temporary construction jobs and 12,000 permanent jobs. ExxonMobil recently said it plans to increase spending this year by 16% to expand operations.
Still ahead tonight, how North Korea is bankrolling its nuclear missile ambitions despite tightened sanctions.
China cuts its economic growth forecast to a 25-year low. That country's government now expects the economy to grow at 6.5%. That's down slightly from last year. Eunice Yoon in Beijing takes a look at what might be the biggest source of China's economic uncertainty.
China's leaders have gathered in Beijing for the annual National People's Congress. This is a time when lawmakers map out the economic agenda for the year. And looming over it all is the Trump administration. Over the weekend, I had an exclusive interview with the Chinese vice finance minister, and he told me that the biggest source of uncertainty for China this year is U.S. policy.
Internationally, I think that's big challenge is uncertainty. So I see some uncertainty. Firstly, is as the Trump administration economic policy. That's what will happen and what impact to the U.S. economy and the global economy. Second uncertainty certainly is Federal Reserve, how let's make decision for interest rate. And most challenging situation is anti-trade.
The vice finance minister told me that Beijing wants and needs to have better communication with the Trump White House, and I specifically asked him if Beijing is concerned about being labeled a currency manipulator.
We hope that should be based on reality, and also U.S. Treasury had these three conditions. They have their judgment, we have our judgment. We keep very close communication day by day.
Another big concern among Trump advisors and foreign businesses is the lack of market access. Many American companies here feel that the environment has become much more hostile. I asked the vice finance minister about this, and he said that under the leadership of President Xi Jinping, that China would continue to embrace market reforms and that foreign firms will soon see the results. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Also in Asia, North Korea wants the world to know that it's aggressively moving forward with its nuclear weapons program. This after launching more missiles over the weekend. But how does a country like North Korea afford something as expensive as a nuclear weapons program? A new report from the United Nations may hold the answer. Michelle Caruso Cabrera has the details.
The new UN report details how North Korea makes millions by selling arms to countries in Africa and the Middle East, and billions selling coal and iron ore to China. One example in the report, a ship seized by Egypt in the Suez Canal was carrying shipments of 30,000 rocket-propelled grenades from North Korea, destination unclear. The report shows the country sells various armaments through a company called Glowcom, short for Global Communications, which advertises on the internet and makes almost no efforts to hide its North Korean origins. And there are many front companies like Glowcom in the report, which are registered in Malaysia or China in order to try and hide their North Korean roots, but not very well. North Korean diplomats have been repeatedly caught smuggling banned goods such as gold bars, cash, watches, even this Bentley. Investigators also discovered that the SWIFT system, the international payment system, still processes transactions for North Korean banks, even though some of those banks are supposed to be banned from using the global financial system by UN sanctions. I've reached out to SWIFT and am waiting for an explanation. But North Korea's biggest influx of cash, more than $1 billion last year, came from selling coal and iron ore to China. China has promised to curtail those purchases more than once, but it hasn't happened. The UN and the panel of experts authoring the report have asked China for an explanation. For Nightly Business Report, Michelle Caruso Cabrera.
General Motors pulls out of the European market, and that is where we begin tonight's Market Focus. In a story we told you last week might happen, GM now will sell its Opel and Vauxhall brands and the European arm of its financial division to the French automaker PSA Group. Separately, the largest U.S. automaker said it would lay off more than 1,000 workers in its assembly plant in Michigan in May as it moves production of the vehicle to Tennessee. Shares of GM were off a fraction at $37.91. Meantime, Delta cut its first quarter operating margin forecast because of rising costs. Also, Delta sees the key metric of passenger revenue per available seat mile as flat instead of the 2% rise previously expected. Shares fell 2.5% to $48.85.
Deutsche Bank is looking to raise $8.5 billion and sell part of its asset management business in a major strategic overhaul. It comes as the bank posted a net loss of $2 billion in the fourth quarter following a settlement with the U.S. government over bad mortgages during the financial crisis. The bank's CEO said that the concerns over the bank's loss of capital led to the cash call.
We were listening to some feedback from the market where there were still concerns, which were to some extent shared by our clients and our counterparts, that we still didn't have enough capital.
Deutsche Bank shares fell nearly 4% to $18.61. A strain of bird flu was found in a Tennessee farm contracted to Tyson Foods. The USDA says this is the first confirmed case of the virus in commercial poultry in the country this year. The government says nearly 74,000 chickens will be destroyed to ensure the disease will not spread or enter the food system. Shares of Tyson off 2.5% to $61.99. And late today, railroad operator CSX reached a deal with its activist investor to install industry veteran Hunter Harrison as the company's new chief executive. The founder of the activist fund will join CSX's board along with new independent directors. Shares of CSX rose slightly in after-hours trading. It closed the regular session at $49.79. And that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. And we want to remind you, this is the time of year your public television station seeks your support.
And I'm Tyler Matheson, and we thank you for your support. Have a great evening, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world, its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.